Well, where all of this really comes from is the data that the IRS gets from the healthcare exchange. So you're an employer, you have an employee that received a premium tax credit through one of the government exchanges. This is in California, it's covered California. In those states that don't have a state-run exchange, it's through the healthcare.gov website. Now, these are folks that, for whatever reason, are not enrolled in your employer coverage. And they decide they're going to go on the exchange and they're going to go get coverage that way. And through the exchange, they can get what's called a premium tax credit. And that basically subsidizes the cost of healthcare coverage. The exchange then sends a list of all the PTC recipients to the IRS, and then the IRS compares it to the 1094Cs and 1095Cs. The employee does identify who his or her employer is. So the IRS has all the information to send you, the employer, a 5699 letter if you didn't file a 1094C and 1095C. Next slide. Okay. So how does the exchange notice happen? One of your full-time employees applies for health care coverage through one of the exchanges and receives a premium tax credit. Importantly, we have in this graphic, it's at least one full-time employee. That employee can fill out whatever the information however he or she wants. There is no, the employee could accidentally, erroneously, intentionally, whatever, could say that person was a full-time employee and didn't receive coverage from you, even though in fact you offered it. And so that exchange could be based on wrong information. Next slide. And you as the employer are going to want to respond to that, because you don't want the exchange to send out that list of PTC employees to the IRS if it's not warranted. Now, there are these things called Section 1411 certifications. The original process was intended for the employers to receive the exchange notices first, and kind of you get sort of a first whack at addressing whether or not that employee should have received a PTC. And for example, if you had offered coverage and that employee had erroneously indicated that he or she wasn't offered coverage, that's the time that is a first opportunity to address it, and you never get the 226J letter at the back end. So unfortunately, some of the exchanges, and frankly most of the exchanges, have not done these notices, and so employers are like, what? I got this 226J notice out of the blue. I don't have a good answer for why the IRS has, or the exchanges have not sent out these notices, but they haven't. And the IRS has used the 226J as a proxy for that notice. And there's some questions to whether they should be able to do that, but that's what they're doing.